Good morning. This is Forex in Four. This is Friday, August 12th, 2011. What a wild ride we've been on this past week here. If you look at equity markets, you can see that they've been flying all around here. Down 500, up 400, down 600, up 400, and today we're starting the day just open up a little bit flat. But I want to get started here and just show you a couple things going on around the globe. We're actually now getting to the point where we're starting to come back towards, I don't want to call it normal news, but where fundamental data is coming in and it's actually showing us a little bit of what's going on. I mean, we've got this dual thing going on. Well, we've got this like triple thing going on. First, it got kicked off with the U.S. downgrade debt ceiling debate. All right, then the focus went back to European bank exposure to sovereign debt, and then the sovereign debt itself from Italy and Spain. Okay, now they were talking about French banks. All right, now we're back to just talking about global weakness in general. And we're looking here at the euro on the 30-minute chart. And you can actually see the euro's higher this morning. And European bourses are higher as well. One of the reasons is that they banned short selling. Okay, and I think it was Spain, Belgium, France. All right, they banned short selling because they don't want to have short sellers attacking the banks because as valuations go down, people start running. It incites this whole wave of hysteria, which potentially has the ability to become a self-fulfilling prophecy, and that people start to take the money out of the banks, you create a run on the bank, and then all of a sudden, boom, all of these issues that were an issue are now actually an issue. So in Europe, they put the short sell ban on, so stocks are higher there. But what's happened is that the actual numbers coming out of Europe were pretty bad today. And this morning, French GDP came in lower than expected. They're expecting growth of 2%. It's now at 1.6%. All right, and they also had industrial production figures that came in for the Eurozone. They were expecting 4.2%. It actually came in at 2.9%. So they were expecting no change for the past month, and it actually declined 0.7%. So, a lot of this has to do with consumer spending, with confidence about what people are doing. But you have to remember that, we have this global contraction going on, and I know everyone's trying to avoid this whole deflationary spiral, and you have these central banks doing everything they can to try and flood the markets with money. But if people don't want to spend it, then that becomes a problem. And we talk about where prices are now, especially here in the U.S. with home prices, and a lot of people are saying, you know what, no thanks. The economy is just too uncertain. I don't want to go out and try and buy a home. All right, I'm afraid that the value may fall further. All right, then I'm going to be on the hook for this, so let's just step aside and let this thing play out. So really no confidence going on around the globe. But one place where there had been confidence was in the Swiss franc. And I want to show you this here. Let's go back to the 2-hour chart here. Okay, you see Swiss franc had been strengthening with this whole debacle going on until it hit the crescendo just above 1 here. We're looking at Euro Swissy. All right, now we had Euro moving higher there. There was some talk yesterday that perhaps the SNB was floating around the story that they may want to try and peg the currency of the euro. So if we know if the euro's declining a bit, that's also going to take the Swiss franc down. So they're starting to put together some plays here that can try and help weaken the Swiss franc. So just want to come back to the 30-minute chart. And you can see on the 30-minute chart here, we have a nice, what actually sets up as what we'd call a bull pennant. All right, that's a technical pattern where you can actually, I'll draw this here. Hopefully this you can see it as well. But basically it goes like this. Okay, and then we'll do a horizontal like this. All right, basically the idea is this, is that you've got this flagpole right here. All right, if you get a breakout to the upside, the move's going to be roughly equivalent to the length of the flagpole. So we could be looking at an area where it's going to be, say, well, let's see here how much higher it can go. I would say roughly Euro Swissy, maybe we're at 110, so say maybe 111, 112 thereabouts. So that could potentially be an area that they look at. But that's one of the things that's happened. Yeah, if we look right there, we've got it roughly 104, let's just say 105 to 109, that's 400 pips. So from here, 107, yeah, we're looking at about 111 there. Now, they also, like yesterday, we had this little quick pop in the Japanese yen that we talked about that we said could have been Bank of Japan operations, which Ministry of Finance official denied. Well, today they asked the SNB, hey, what are you guys doing? Are you doing any intervention? And they, of course, declined to comment as well. So you're not going to get any comments out of these central bankers now, all right? And these guys are really working behind the scenes to try and keep these markets, I don't know if it's necessarily stability, but just moving in their favor. So in any event, we can take a quick peek at the Aussie. Okay, Aussie's moving just slightly higher, and you can see we're on just a slight bit of an uptrend here. We can take a line here, and we can do a nice one of these, draw from the lows, and you can see we've got just a little bit of a trend line happening here. All right, so it looks like we're bouncing off of these things, perhaps maybe a pullback to, say, 102.75. All right, this morning I want to look at gold. Gold is sold off from the highs 1,800. We're sitting about 1,750 now. All right, we know that the CME actually raised margin requirements there, so it sort of shook some of the speculators out, and that was an issue. All right, we also have oil. Okay, oil's sort of popping back up towards this 85 level. We've seen it get down under $80 a barrel, but now you know, the cheap money idea is coming back into play, and so everybody rushes to oil. That's one of the things. I mean, one of the things we haven't looked at recently is Canada either. All right, you can see dollar loonie just breached parity there. All right, before pulling back, so we're firmly under parity right now, about 98.75, and we'll see what happens in here. But I think the loonie is going to stay under parity here for a little bit. Who else? We can look at the pound. All right, it looks like maybe the riots over there are starting to subsist a little bit, so they're getting a little bit of a bounce. Okay, and they're also getting a bounce because, you know, they're sort of like this neutral currency right now, where, you know, they're neither too accommodative over there, nor are they too tightening. All right, they're not really tied to commodities, nor are they really known as a safe haven. So right now, I would say that the British pound is sort of like this tipping point currency that can go either way. So when you know, money's not enamored with the U.S. Because we know that rates are going to be low here for a while, and it's not too enamored with the euro because we're just uncertain about what's going to happen here. All right, the British pound is an alternative, especially if you have them in Japan and in Switzerland attempting to intervene in the currency. So you can see that the whatchamacallit, that the British pound caught a bounce there. But here was the actual intervention that happened with Japan the other day, and then here was this like minor little blip that happened as well, and I showed you that yesterday. So right now we've got dollar yen at about 76.5, and we're approaching a 76.25 sort of line in the sand, which has been the all-time low of the year for the pair, which would be high for the yen, and we'll see if it gets there. Now later this morning we're going to have U.S. advanced retail sales figures out, and the University of Michigan consumer confidence figures, and confidence figures are expected to be lower. All right, retail sales though, they're expecting a little bit of a higher number, and I'm going to be honest with you, I'm going to be a little bit shocked if that happens, because we know about the slowing economy here, we know about the jobs picture. Even though people are saying it's starting to get better, you know, I'm not just quite certain that people are ready to go out and make these expenditures at this point. And you know, we know that consumer spending went a little less than on GDP the other day. All right, that's makes up roughly 70% of GDP here in the U.S. is consumer spending. So if that slows, that's going to hurt the economy, and you can see that happened in France earlier this morning. Okay, so that's really what we're looking at here, folks. We've got a day where we're not really in risk-taking mode. We're not really in risk aversion mode. I mean, we have some dollar weakness. Okay, we saw the euro was higher, but you can see that it was higher on weak data figures. All right, and also on this a bit that they can't sell short over in Europe. So you probably have a lot of short covering going on, and you also have you know, people trying to get long to squeeze those short sellers. So you know, you've got markets higher, but it isn't necessarily because people think, oh, the market looks great right here. Although we did come off of a nice rally yesterday in stocks here in the U.S., which of course that pushed Asian stocks higher overnight in response. All right, and just sort of get the follow through. But right now we're going into a weekend where, you know, if this banking problem in the Eurozone is you know, a worry for people, people may decide, you know what, I don't want to be long anything going into the weekend. Perhaps I'll just get out right here. So we could see a flat sort of day where you know, we start to peter out a little bit. So it'll be interesting to see what happens, if anything, over the weekend, what the markets do. But I think you know, it's just time for a little bit of calm in the markets for everybody to sort of get a level head going, and then we can start it fresh next week. So that's what we're looking at for today, folks. Good trading to all.